So this video is on taxation on employment income. So you want to first of all know what things are allowed for tax purposes and also what items are also not allowed for tax purposes. Of course, maybe this is just an intro. I'll try and first of all highlight in the beginning part of this video just some things that we know, okay, this should be taxed, and then we'll have a look at a certain question in order to now get to supplement the knowledge that we're going to get from this intro. So we want to see certain things that are allowed on taxation of employment income. So basically what we look at in this topic are, emoluments. Emoluments can be, benefits like salary, of course, salary, bonuses. So all these things that I'm listing right here, they are subject to tax. Okay, what about allowances as well? Any allowances that an employee receives, they are also subject to tax. Take note of that. So these things I'm listing right now, these are allowed, definitely allowed for tax purposes. There's what they call long service awards, such things like long service. These are just allowed for tax purposes. So service award. One other thing we can look at, okay, if we look at the long service awards, allowances, and by when we say allowances, all those that will be including that detail of allowance at the end, that's what we mean. Those are all allowed for tax purposes. Even leave pay, that money that someone can even be receiving whilst on leave, this is subject to tax. And they say that if the question specifies that this person was given any payments at the end or cessation of their employment, all those monies or emoluments that they receive, they are all subject as well to tax. So let us just give a few before we get to a question of those that are not allowed for tax purposes. So things like you can look at things like, okay, like Labor Day awards, Labor Day award, or pension benefits, we should know what pension is. You're out of employment and you're receiving some form of benefit, or pension benefits are not allowed for tax purposes. So all these I'm listing right now on the screen, these are not allowed and should not be included in the computation of the taxable income on an employee. Okay, so these Labor Day awards or pension benefits. What are all these pension benefits? Is what they call severance. I don't know if I'll spell it properly. Severance. This is severance pay. Yeah, those are what they call pension benefits. Yeah, and might maybe look at what else. Severance pay. Even certain, like if someone maybe was eating some meals at a certain workplace, those costs, they are also not allowed as well. So let us now get into a question and try to supplement, I'm sure, with the question, or even see maybe other more components and see which ones, of course, would be allowed and not allowed as well. So we need to try and see how best we can compute the taxable income for an employee. So very soon I'll be sharing a screen of the question. Let us have a look at this question on the screen. Jessica Mwale, who had been employed as a human resource director at TNC PLC for many years, was declared redundant on 31st May 2019. Her contract of employment had provided for the following: 1. Annual salary of 576 and an annual housing allowance of 43,200. Let us stop just there. We'll be analyzing one by one. Remember, we're trying to compute Jessica's taxable income at the end of the day with all these possible adjustments. So salary is supposed to be taxed, so we have to include it in our computations. So are we just going to get the 576 and just drop it there? No, we will not do that, because they've told us when she stopped, it became redundant. Someone has stopped. That's as of 31st May. So you just count the months from the time from January to May, because a tax year runs from 1st January to 31st December, right? So you want to just take that period that she's worked for. You don't want to start overstating anything. So you just take the 5 months, that's as of 31st May. So 5 months of 576 is what you will get. And then from there, you will get, is it 240? Yeah. So at the end of the day, I'll show you how we should write these things. But right now, we want to just discuss and just analyze these one by one. So definitely salary will include in the computations. And we're just going to get 5 out of, how many months are there in a year? 12 of that figure, which would give us 240. Housing allowance. What did we say in the intro? All allowances are taxable. So definitely this one is coming as well. But we're not getting the whole 43.2 because they said annual allowance, right? So we only need 5, I said just the 5 months this person has worked for out of 12 of that figure, giving us 18,000. Number 2, the company reimbursed her the following expenses she incurred in May 2019 for, after producing relevant supporting documentation. Let's see these expenses: medical bills, life insurance, electricity bills, water bills. Which of these will be included in the computation? Remember, all these adjustments that have been listed, we are only looking for those that are allowed for tax purposes. Take note of this. When we're computing employment income, we are only looking out for those that are allowed for tax purposes. Looking at medical bills. Medical bills are strictly not allowed for tax purposes. So we should not see that figure included in our computation. Next, life insurance premiums. These definitely are allowed. Electricity bills, yes, they are allowed, because they said these persons are even provided supporting, or should I say relevant documentation for those expenses that they had incurred. Probably it was even for the purpose of the business. That's why they were asked to provide relevant documentation, but they are definitely allowed. Water bills, same story here as well. These are allowed. So the only one they've just strictly not allowed, according to the, let's say, the tax manual, the medical bills are specifically not allowed. So just need these 3: life, electricity bill, and water bills. 3. In January 2019, the company had provided her with New Year shopping vouchers with a value of 16,000. 16,000. New Year's of 16,000. So what are we going to do there? Shopping vouchers are allowed for taxation. When you're computing employment income, a shopping voucher should definitely be included for the purpose of tax. Okay, so that one as well, we'll just come and grab the whole 16 there and come and include it. 4. Through her employment in the tax year of 2019, she was provided with free meals in TNC PLC staff canteen. The total cost of these meals to the company was 19,000. The canteen is available to all the company's employees. Okay, so these as well, we're looking at meals here. This is the detail here. People are eating meals, like, the general meals that someone could take at a workplace. Those expenses, should they be included? No, these should be incurred by the company and not by an individual. They just mentioned that whether by all employees. So no, this is the company's actually expense. So no. 5. Throughout her employment in the tax year of 2019, Jessica used her own personal Toyota Fortuner motor car with a cylinder capacity of 3,000 cc for the purpose of employment. She acquired the car on 1st January 2019 at a cost of 150,000. She traveled a total of 30,000 kilometers in the motor car in the taxi 2019, out of which 21,000 kilometers in the performance of the duties of her employment. Okay, then she incurred motor car running expenses of 20,000 per month in the taxi 2019. TNC paid her a commuted fuel allowance of 2,400 per month through her period of employment. Well, there's a number of things mentioned in here. Let's take them one by one. First of all, they're saying she's used her personal vehicle for what? The purpose of the business. So usually the rule that is there is that there's specifically a rule for this. If an employee uses their own personal items, maybe it could be their equipment, vehicles, that part that has worked for the business, or if it was maybe entirely for the business, they can be offered capital allowances if they were using, of course, an asset, because capital allowances are only there for assets, like fixed assets. So she has an asset which is a car, so definitely she can be subject to capital allowances as a relief. So let us first read. The cost was 150 of this vehicle. Okay, so what do we know about capital allowances? First of all, capital allowances are charged on the cost price of that particular asset. So a Fortuner is just like a car. Usually it falls under that bracket of non-commercial. This car would not be used for commercial business, like, transporting bricks. What this is a non-commercial vehicle, so it will fall under that bracket of 20%, and that is the amount we'll be charging on the cost price to get the capital allowance due to this person, Jessica. So let's go to a new page where I'll show you the computations of all these details that they've given, and also taking note of how many kilometers she did for the business, which was 21,000 kilometers for the business out of 30. So let's go to the next screen and see how we'll compute. Okay, so we want first of all to check, is she subject to any capital allowances? We said yes. If you use an asset of your own and it's for the purpose of the business, definitely you will be given capital allowances. So 150 was the cost of this car, so you put 150. We said this is a non-commercial vehicle, so capital allowances are charged at what? 20%, giving you 30,000. Just there. This is how much you should get for capital allowances. Now here's the trick. Did she use the car entirely for the business? They said out of a 30 kilometer, should I say, use of that car, 21,000 was for the business. Get that part right, huh? Out of 30 kilometers of the use of that vehicle, 21,000 was for the business. Here we are only concerned with what was for the business. That's all when we're taxing things. So you get times 21 over 30. We just want that portion that was part of the business. And you tell me that once you do that on the capital allowance, it should leave you with 21,000 that this person should now claim on those capital allowances. So that's the trick as well. Just remember the rule. If you're not clear, just rewind and you'll get the explanation yet again on how we've done all these computations. So you've done the part for capital allowances, and okay, this is what is due to this person. There was another detail, and which they said this person also had motor running expenses which were being incurred of 2,000 per month. 2,000 per month. Okay. Motor expenses, well, as well, part of them, as we said, were part of the business somewhere private, because 21,000 of those kilometers were moved for the purpose of the business. So first of all, let's first compute how much she's incurred first of all for the whole period she was working. So she's just worked for 5 months, as we said earlier, up to May. So 2,000 by 5 should give us 10,000. Then of that 10, we only want the portion that was for the business, which is the same thing that we did, times 21 over 30, giving us what for motor expenses? you should end with 7,000 here. So the rule that is there is that these two which we have computed, the capital allowance of 21 and the these motor expenses that were incurred for the purpose of the business, these they come to act as a relief to the employer when you are computing taxable incomes, in that they are subtracted and not added back. So I hope just take note. Usually when we are like summing up everything that is subject to tax, these particular capital allowances and these motor expenses which were done for the business, they are all subtracted. Just that's why I'm saying they act as a relief, so that they do not add on to the taxable amount. Okay, there was another detail. If we go back to the question of fuel allowance of 2,400, what did we say earlier on? All allowances are taxed. Definitely it will be included. Okay, so all these things like fuel allowance, these are even just added, you know, they're just accumulating to the total taxable, should I say, income for this personal employee. Okay, so it will be like first 24 was the allowance per month. So get for the entire period she worked times 5, giving you what? 12,000. That's how much will be taxed on fuel allowance, and we said this will be added. Let's go back to our question now. Next, we have 6. She was additionally given a Labor Day award of 15,000 kwacha cash on 1st May 2019 and a long service award of 43,000 cash on 10th May. What did we say? Labor Day awards, they are not allowed for tax purposes. Service awards, long-term service awards, these should be taxed as per rules. Okay, so we'll come and add these back, the long-term service awards of 43. And as we've seen, the period is up to May, and we're actually computing up to May because that's the only time as she worked for. Okay, 7. On being declared redundant on 31st May 2019, Jessica received the following amounts. Accrued leave pay. Leave pay is subject to income tax, so we have to definitely add it back when we're computing these taxable incomes on Jessica's employment income. Repatriation pay is a form of pension benefits. Take note of this. Repatriation pay is a form of pension benefits, and it's not allowed for tax purposes. As we said in a general statement, all pension benefits are not allowed. Gratuities, those things are not allowed. Severance pay, no. We mentioned this one as well in our intro. It's a pension benefit, it's not going to be included. Salary in lieu of notice, no, as well. The rules do not allow this one as well. 8. Throughout her employment with TNC PLC, the company had always deducted NAPSA contributions of 5% of her basic salary as employees. Contribution, and the company had always contributed 5% of her basic salary as employees NAPSA contributions on her behalf. Well, just before we even go far, back in the days, NAPSA contributions were deducted. They were among the things that we subtract when we're computing these allowable taxable incomes. But now, according to the new revised rules in taxation, it's no longer allowed, so we will not handle this. 9. Jessica paid interest of 50,000 per month on a personal bank loan. So no, remember, these are taxation of what? Employment income. Employment income. The personal loan has nothing to do with this. You should just get the gist of what we've been talking about. Then there was unprofessional subscription relevant to duties of her employment. You hit the keyword. This is employment income we're taxing for, but they've been added this part. Professional subscription relevant to duties of her employment of 1,100. So these will come and add them back. Subscription fees. Okay. But in fact, subscription fees, should be deducted. Actually, this is a rule actually that all subscription fees should be subtracted, like amongst those capital allowances as well. Even this one will be subtracted. So in short, just remember that subscription fees should be subtracted and they're included in the computations. 10 just says pay as you earn 91,987 was deducted from her emoluments. That just means that, okay, after you compute the income tax that should be subject to her income that should be subject to taxation purposes, we'll first of all take that income through those income bands. We calculate what will be due to her for income tax, then we'll come and less pay as you earn. It's usually a provision. Pay as you earn is like you already paid in advance. So once you compute your taxable income, we'll be like, okay, you've already deposited something under pay as you earn. We will less from what we have computed. That's what will come and happen to this one at the end of the day. But for what we've talked about from 1 to adjustment 9, I'm about to share a picture of how all this should have been recorded. So everything we have talked about, you're now coming to put it down in writing. Those that are only what allowed for taxation purposes. So we said salary, as you can see, we took a portion because that was her annual salary, but she only worked up to May, which we had to take 5 months out of 12 times the annual salary, which left us 240. Housing allowance, which was 43.2. We did the same thing. This was an annual housing allowance. We did the same thing, 5 over 12 times 43.2 and gave us 18,000. We talked about these things like life insurance premium. These are allowed for tax purposes. We said electricity bills definitely allowed. Water bills are allowed. And shopping vouchers, yes, they're allowed. And there's the 16. So all these things, we add them. Take note of them. Fuel allowance, we add back as well, just as you can see. If there was any other detail which had also allowance in the question, would have also brought it, but currently we only had this. Long service award, we add it back there, as you can see there. It was 43 to 43,000. Then there's that arrow I drew there. That was leave pay. It was just forgotten, but just follow that arrow. Leave pay was 7,200. This was also supposed to be like included in this. And then we like sum them up. These are the things that should be first added, all these which I've listed. Then there are those now which they say, okay, these can act as a relief to you, meaning we can subtract them to reduce what should be due to you first. So things that they allow are, as I've written, allowable deductions. Professional subscription, it's allowed for, you can remove it. It was 1,100. Capital allowances, we just calculated. If you rewind in our video, we got that, okay, it should be 21,000 due for capital allowances, which this person can claim. That just for that portion of the business. Expenses, motor running expenses, those are the ones you're seeing there. We computed them as well. We just took the portion that was for the business, which was 7,000, and therefore we concluded, as you can see, by summing up those, which gave us 29,100 of the allowable deductions. Then now we got that total up there, which is 362,600 minus 29,100, giving us a difference of 333,500 as your, as your employee income. Then from there, we will now move on to taking it through the income bands and finally get the income tax that will be due to Jessica. So like if what as we said, you take it through the bands, right? It's here. First of all, like we've done here, right? This is the tax-free rate you're seeing there, right? 333,500 less the tax-free. We're now going through those bands. They say first remove tax-free rate, giving us 285,500. Then we took it through those income bands, as you can see, 25% of that, the first band, second band, until the whole amount is dissolved. So it was leaving me with about 103,972.5 due for income tax. But just before they take this money, there was that pay as you earn on adjustment 10, the one I talked about. This is where it comes in. After you found what is due to this person, get that pay as you earn and come and less it from this last amount you've just found here, so that you can, okay, this person is just due for this amount. So this video was on taxation of employment income and what you need to know about this part of taxation.